Okay, everybody, it is me, Gregory Mannarino. It is Friday, March 12th, 2021. So, what's going on this morning? It's just lovely as usual. We just got some economic news, information, propaganda, I don't know, however you want to categorize it. And it shows clearly that we are experiencing inflation despite the fact that for I don't know how many years we've been told, oh, there's no inflation. Well, this is hitting the debt market. Let me explain this to you very clearly. The arch enemy of the debt market is inflation. Okay, so when there's news of inflation or the market thinks there's going to be inflation, it hits the debt market immediately. Now, if you were to look at the 10-year yield, which I always look at, and so do you will notice it has gone up. It is about 1.6 right now after a significant drop over the last several trading days. Again, the market does not want to hear this. The debt market does not want to hear about inflation. Henceforth, why? Since time immemorial, we've been lied to and propagandized that there's no inflation. All right, but you know what? There actually is. Duh. Can't make this stuff up. But that's what's happening here. So we're going to need to watch this, people. I sincerely believe, and I've covered this to the point of like ridiculousness, that the Fed wants to control the yield curve. They want more control in any way they can possibly get it. You understand? So what we can expect here moving forward is more news about, oh yeah, inflation is real, okay? And it's going to hit the debt market. 10-year yield is going to rise. It's going to put pressure on the stock market. And then investors are going to start crying, please, Fed, do something. And of course, the Fed's going to go, okay. And, they're going to get in here and control the yield curve. That's what they want to do. And the stock market is going to go ballistic. Ballistic. Don't be surprised to see, I don't know, over the weekend, for example, maybe even today, they're going to float out a Fed president, and that Fed president is going to try to calm the market with regard to inflation. Don't worry, we got your back. That's what they do. Every time there's some kind of an incident like this, they float out, a creature from the Federal Reserve. I don't know, it's been Brainerd lately. Maybe it'll be Kashkari is another one, the Lex Luthor of the Federal Reserve. And, he's going to come out and say, oh, don't worry. The Fed, we're going to get in here. We're going to fix it, everything. We're going to make it right for you. So just don't worry about it. And, of course, the market will respond in a positive way. But what we need to watch for is this 10-year yield to start rising above 1.6 for a while, putting some pressure on the stock market, the dollar getting stronger. And again, they got to create a crisis. Once they create a crisis, okay, problem, reaction, oh no, and then solution, don't worry about it, we're going to control the yield curve. This is what they're going to do. This is exactly what they're going to do and how they're going to play this. Now, again, I don't know if they're going to institute just full-on yield curve control or they're going to start to dabble in it by initiating a new Operation Twist. Operation Twist, buying long-term bonds, selling short-term bonds. You understand? Very simple, very easy. I don't know what they're going to do, but they're going to do something, but they need to create a crisis first. 10-year yield above 1.6, maybe 1.7. The market's going to hate it, especially if the dollar gets stronger. Then they're going to act. This is all deliberate. This is all being set up right now. Trust me, this is all being set up right now. Nothing is by accident. I think we're clear on that. Okay, let us move forward here. Bitcoin, cryptocurrencies under a little bit of pressure today. Okay, doesn't mean a damn thing. In my view, all of them are going much higher. You got a knee-jerk higher right now in the dollar on this inflation news, and of course that's going to hit precious metals. There's just no doubt about it. But again, let them play their game. We're going to play ours. Central banks are inflating. People, I covered this yesterday, what the ECB is doing. You knew it was coming because they told you it was coming. You got the Federal Reserve that's gone completely out of their minds. to enforce their end game, to inflate. And again, I'm going to say this in case you haven't heard it before. What you're witnessing now with regard to central banks inflating their balance sheet, you haven't seen anything yet. Not even close. Not even close. So understanding that mechanism should make it simple to you. Own physical gold. Own and hold physical silver. Physical silver is still Greg Mannarino's favorite asset of all time. It's so undervalued based upon a plethora of things. You just got to know where the opportunities are. Speaking of opportunities, real quick, for my trader lions out here, I have my eyes on a few things. So be sure to check your email box if you are a subscriber to my newsletter. I hope you are. There is a link in the description of this video. It's 100% free to subscribe to my newsletter. I will be firing out at least one new stock pick today. So we're going to take advantage of that. We're going to take advantage of everything. There's nothing that we will not be taking advantage of. This twisted, distorted environment presents people like you and me with abounding opportunity. We know the game. We know what they're going to do before they do it. Do you realize the edge that gives us? Do you realize? I think you do. If you've been following this blog and getting into things like Bitcoin, cryptocurrencies, understanding why you're holding metals, trading this market, it's an incredible situation. Good. They're going to play their game like I always say. We are going to play ours, and we can play it better because we know what they're going to do before they do it. It can't be easier. That's where we stand right now, people. So again, we got a 10-year yield higher. We got $1 higher on inflationary news that came out this morning. And, look, these are the numbers they're even letting us know. Could you imagine what these really, really are? Understand at its core what is going on. We have central banks, well, let's just stick to the Federal Reserve, printing cash out of thin air like there's no tomorrow, because there isn't a tomorrow for those who are on the wrong side of this. You understand? They're doing this by design. They're buying it all. Fulfilling their end game. Now we have all these extra dollars in digital form, in printed form, whatever form they are. At one point, they're going to start chasing the same amount of goods when we have a meltdown in the debt market. Okay, this issue in the debt market right now is rattling the market. There's no doubt about it. So that's why stock futures right now are under a little bit of pressure. But let's see what they pull off. Wait till they float out one of the ugly, hideous, disgusting, vomitous creatures from the Federal Reserve. And that's what they're going to do. Oh, don't worry about it. We'll take care of it. Yeah, the Fed, we're going to do it because we're your friend. We're your friend. Can't make this stuff up, people, but that's the situation. All right, look, this guy here loves you a lot. Please share the video. Please get it out there. And subscribe to my newsletter. You will get at least one stock pick in your email box today. I already have my eye on it. All right, I'm out of here. Love you a lot. See you later.